All right, so today we had a rather subdued day in the market today. The market went up, let's see, 2.39%. But today, even though it was a little bit light day, we still beat the market at 2.69%, and I made another $350. Now, a quick summary of some things that went on today. Number one, I got my state tax return in, so that money went right into my Robinhood account, and it's sitting there in cash, basically just waiting to make a move. And I think we're getting to a point, and probably in the next week or two, where you're going to see some really amazing opportunities arise. Not many of them came today. There were two that we'll talk about. But for the most part, this is one of those times where you have to just strategically sit and wait. And if you have a beer, well, you drink and do a YouTube video. So let's talk about kind of the big thing that was happening in the market today. Overall, what got announced is there was a third phase of the government stimulus or bailout or whatever you want to call it. But one of the things that one of the things it entailed was there was going to be spending for the government to give kind of a backdrop of safety to banks. And for mortgage-backed securities, and we talked about that in yesterday's video, their ability to pay income and to generate income and dividends for their shareholders relies on them actually having people make mortgage payments. So if a bank all of a sudden says, we're going to give you 90 days of no mortgage payments, while that helps the consumer, it definitely screws the REIT, the real estate investment trust, and they get put under a lot of pressure, and you'll see a lot of their stock get sold and their stock price will plummet. So we've seen a little bit of that lately, and we didn't really know what was going on with it. So, kind of where things would end up. So what happened was the government actually committed to have certain companies. One of them was BlackRock, buy a ridiculous amount. I think it was like 500 billion or million. It was a lot of illions in mortgage-backed securities. So one of the things that we saw was that these mortgage-backed securities that we talked about in our last two videos that were, looking like they could be really shaky. I mean, one of them went under pretty much officially, and the other ones are just sitting there barely treading water. So there were a couple of them that I looked at this morning, and again, it was Pacific time, so a few hours after the market opened, but we're going to look at. So number one was MFA Financial. And we'll take a look at the last 3 months like we always do. We look at Death Day, which is this dip. I can tell you right now, it's February 20th, and it priced out at 804. And if you even take it out a year, it's a dead even line. I mean, it's very consistent. If you look at 5 years, it's pretty darn even as far as what it does. So 804 is what it went through, and it went massively down, and then there was hope that the government would help out, and then that fell through. And it got down to, 35 cents per share. But as the government showed a willingness to actually, in a sense, bail out or serve as a backstop for these REITs, you saw it jump up to 141. So I actually got in today at 140 or 176, which was right around, I don't know, somewhere around here. But it went down a little bit, went down to 141, and then it bounced back overall. So I'm a little bit underwater on it for right now, but if you look at buying it for 176, when, if it goes back to normal, anywhere near normal, let's say it goes back to normal, you're looking at a 4.5 to 5 times return on it. And I just jumped on that today because you saw the prices moving up on it. And I just thought it was, I'll throw a little bit of money at it, and these things are so dead even, it looks like a great investment. So the other one is Invesco Mortgage Capital. Invesco, they're the title sponsor of the Denver Broncos football stadium, so they're a big name in the industry. They do the same thing. Again, really dead even over a year. If anything, it's going up a little bit, which just shows how fiscally they do really well. Again, 3 months, it's dead even, and there is Death Day, as I like to call it, going for $18 a share. And it got down all the way down to 274. So I'm like, wow, that's like 7 to 8 times return if it comes back to normal. And so I took it in at 318. So far I've made 1 penny. But this one's an absolute no-brainer for me. I mean, I had to jump in and do it. Normally I do limit orders. This one I did as a market order. I have to jump in and do it. So has almost $1 billion of market cap, and that was like that's where it's at right now. But when it was at where it was before, it was probably a good $4 billion in market capital. So this is one where I realized that I don't normally go in and just buy it on the spot, but I realized at this point, you kind of have to. You have to take a stab at two of the ones that you want to do. And there are others that I'm looking at, but these, I went through and I looked which one had the biggest amount of potential for return from where they fell. And so from, where was this at here? From the 20th of February, $18. Oop, get in there. 18.27 to where it is right now. I mean, honestly, it's just really simple. 18.27 divided by 318. And it's almost 6 times return. So, I mean, I couldn't not throw money at this. So if it comes back at 6 times return, I'll make $4,000 on this. So not bad for that type of opportunity. Beyond that, it was an overall good day. The market started really high and then it fell back down. I think part of it is because there was a little bit of uncertainty on Capitol Hill, but we're not getting into that kind of we're not going to get into a lot kind of details. But overall, the stocks that I have in my portfolio are doing pretty good. I'm not really happy about that. I want to see them drop a little bit more, especially ones on my watch list, because I don't want to sit here and pay more for that stock than I have to. So I still think that we are going to hit bottom and we're not anywhere near there yet. So some highlights today: El Dorado Resorts did 11%. So today I made $226 on that. So again, they're hotel chains, people getting out and traveling. Red Robin, the restaurant chain, made 23% today. And so today I made $200. So far I'm at about $550 for them. And they're sitting here at $12.61. I got in at $6. So it almost makes me wish I bought more of them, but no big deal. There's going to be some really good opportunities out there. And this thing's going to go a lot higher, especially considering the fact that on February 20th, it was at 37. So if it goes back to that amount, then I'll make a 6 times profit on it, which is pretty good. And lastly, Norwegian Cruise Line. This one was crazy. This one up 23% today. And I think this industry is going to be one that's going to be the slowest to recover. But you do have the baby boomers out there that spend a lot of money on that. So today I made $83. Not bad. It's okay. It's nothing great. But we're working our way back up to the $26.18 that I paid for it. And just a reminder that on February 20th, about right there, it was ticking at about $50 a share. So it's got a long way to go up. I'm actually tempted to buy some at 17, but we'll see. Quiet day in the market. I'm honestly not happy that the market went up. It's causing me to drink. But I'm going to take a look and see what the market is doing tomorrow, and hopefully that we have something good. So a couple things that I look at just to kind of get a sense on what tomorrow is going to be. Number one, so we'll do Dow Jones Futures. And number two, we'll do FTSE Futures. So the Dow Jones Futures basically are bets that people have on what they think that the stock market will be on the following day. So we're going to go to pre-market trading, and we can go Dow Futures, open that up. So they are looking at Dow Futures is going up $200. So everybody's thinking the stock market's going to go up tomorrow. I think it's partially based on their optimism that the legislation in Washington gets hammered through. You can look at that as well. Let me see. I never go on this one as much. All right. So anyway, so that looks like it's going to be positive. And then also FTSE, that is the Financial Times Stock Exchange. That's the one in London. They think that it's going to go down. And yes, I am using an ad blocker. So let's do this. let's go to see if they showed on here. Boom, boom, boom. Nope, that's just the stock. Let's see if they have it on here. But I like to do this because it gives you a sense on them. I mean, they're going to open up early. And yeah, so tomorrow they think the stock's going down. So it's interesting. So with that in mind, I have two separate measurements. So we'll see what happens tomorrow. Other than that, I got beer to drink. I'll see you.